Payslip, a summary of payroll elements. So to start off, what is a payslip? It's basically a document that gives an employee information about what their pay relates to. So it's going to show things such as their total wages, their contract wages for a given period in time. It's going to tell them about what deductions have been made, so whether they are mandatory deductions or voluntary deductions. And it's also going to tell the individual what their take-home pay is, so what pay they can expect within the bank. So there is an example of a payslip on screen, and there's also a PDF version within your Learning Resources folder within the course. So what about the legalities of a payslip? Well, within the UK, an employer must provide an employee with a payslip that shows the earnings before and after any deductions. So the best way of thinking about earnings before any deductions is to think about your contract amount. So what your salary is within your contract. So for example, if you are being paid £1,000 every month, your contract might state that you have an annual salary of £12,000. And also after deductions, so taking off different deduction elements, so that it gives you a value as to what you should expect within the bank. It should detail any amount of deductions. These could change. For example, tax and national insurance, they are based on thresholds, personal allowances, and percentage rates. So in theory, the more that you get paid, then your deduction should also increase. And the number of hours you've worked, and if your pay varies dependent on the time worked. So there are different ways of being paid. You could be paid your salary, which is a fixed amount. You could be paid an hourly rate, a daily rate, and there's other things which we'll take a look at, such as piece rate. It could be bonuses and commissions have an effect on the amount that you are paid also. So there's a few different kinds of pay elements that can be involved within the compilation of your payslip. So that payslip that we saw earlier on screen, which is also within your Learning Resources folder, let's break it down. So we've got some key information, but it's very basic information. So you would have your name, and that's to distinguish that it is your payslip, because you wouldn't want to be receiving somebody else's payslip. And also the period involved. So in this case, we are looking at the month ending the 25th of February 2023. Sometimes it doesn't actually state the date. It might just give the period. So for example, it might have month 1, month 2, month 3, or just 1, 2, 3 to indicate the periods. Just bear in mind that the financial year from HMRC's perspective, and also from your pay as you earn and payslip perspective, starts on the 6th of April. So if you are going to be paid on the 30th of April, that's going to be period 1, also known as month 1. Payslips can come in any format, as long as they contain the key information that you need from a legal point of view. Then it is up to the organisation, or more so the software that they are using, as to how the information will be relayed back to you. So in this example, they don't actually state the period by 1, 2, 3 on a monthly basis. They're actually stating the month ending date. So some of that key information that you would expect to see on your payslip, you would expect to see a tax code. So the tax code for this year would be 1257L. In this case, it's a week 1, month 1 basis. I'm not going to go into what this means at this stage, but we will be looking at this in greater detail later on in the course. But all you need to know for now is that your tax code, it's basically going to indicate what your tax-free allowance is going to be. So how much money you can earn before you start paying tax. So within the UK, the basic tax rate is 20%. You don't pay that 20% straight away. You're allowed to earn so much money before you actually start paying 20 pence on every pound. You would expect to see a national insurance number. This should be unique to you. It's generated normally when you turn, or prior to you turning 16 years of age, or if you are becoming a citizen of the UK, you will be allocated a national insurance number. And they always consist of 2 letters, 6 numbers, and then 1 letter at the end. You will also have a national insurance letter. So it's saying here national insurance table. And again, I'm not going to go into too much detail about this at the moment. It's something that we will be looking at later on in a future lesson. But just to make you aware, there are different national insurance rates and categories, and those categories are broken down by different letters. Just so you know, most people are category A. So you're more than likely going to see A within this section of the payslip. And also annual leave. Now within the UK, the minimum annual leave that you are allowed to receive is 28 days. So that's 20 days paid annual leave plus your 8 days bank holiday. It might be that you are allowed to carry forward some annual leave by your employer from one period into the next. So for example, during the COVID lockdown, lots of people didn't take annual leave because they were working from home anyway. So they were allowed to carry forward quite a bit of annual leave into the next period. Normally, an employer might say you can carry forward a maximum of 5 days, but it is up to the employer's discretion. But just on screen here, I've given you an extreme example. So we're carrying forward 53.62 days. Probably never ever going to be that high, and it is an extremity just to show you how it would work, because in effect, this would be 2 years worth of annual leave. So let's look at the payments. You should see a section which just details your payments. Is it going to be a salary or a wage? Just to distinguish between the two. A salary is normally a fixed amount. It's normally based on an annual value. So for example, on screen here, we have £30,000 a year, and that breaks down to £2,500 per month. A wage is likely to be on an hourly basis. So for example, you are paid £10 per hour. In the month, if you had worked 50 hours, then you would expect to see a wage of £500. However, you are paid, whether it's salary, wage, commission, bonuses, pay in arrears, holiday pay, SSP, SMP. Some of these elements which we're going to be looking at within this course, they should all be detailed within a payment section so that you can see a breakdown as to what your total pay is made up of. So this one, it's quite simple. We're just using a salary of £30,000 a year, which comes out at £2,500. And opposing that, you would expect to see a deduction section. So you're going to have your mandatory, your statutory deductions, such as tax and NI. They have to be deducted by law under the pay-as-you-earn system. But you might have some voluntary deductions also. So I've put Nest in there, which is a pension scheme. That is, I would say, semi-voluntary at the moment. You do have to be auto-enrolled into a pension scheme, but you can also opt out and have that money refunded back to you. There could be other items that you see within here. So for example, you may be part of a trade union and you might choose to pay for that membership as a deduction from your salary, from your pay. It might be that your employer has a salary sacrifice scheme, so that might help you pay towards registered childcare, purchasing a car, some sort of electrical equipment like a mobile phone or a laptop, or they might have a cycle to work scheme, and they would list those within this deduction section. So you could see a breakdown as to which deductions are going to be coming off this pay slip. So you have all your payments, and you also have your deductions. And just on the design of this pay slip, I've put in this red box just a little note. We'll see when we look at some of the formats that there are areas within a pay slip, depending on the software and the format of the pay slip, as to how the employer can communicate with you through the pay slip as an employee. Now, just recently, there has been a 1.25% uplift in national insurance contributions. There's been a lot of information within the media. HMRC have been flagging this up with employers and employees. But it's also good just to reiterate, if you are an employer and you're running payroll, if there's any key information that you want to reaffirm to your workers, you can actually detail that within the payslip as a little bit of a reminder. So earlier on, I was talking about annual leave, how you could carry so many days forward. For example, let's say with this employer example on screen that you are allowed to carry forward 10 days annual leave. It might be that in March and April, you make that note and you detail that note within the payslip. It's just an extra reminder and an extra prompt for your workers to make sure that they are adhering to the rules of the organisation or the rules and legislation that have been put into place by the government and HMRC. And the third most important part of the payslip is going to incorporate the payments and the deductions. So it's going to show you what you should actually expect into the bank, and hopefully it should be telling you what date. Again, the date of when payment is going to be made is likely going to be in your contract of employment. So it's not a necessity that you have it within the payslip, but the more information that you have within the payslip, the more understandable it is for your employee, then the easier it is for them to understand how and when they are being paid. So let's just look at a couple of terms here. We have our gross pay, which you'll come across, especially when we are looking at the wages control account in future lessons. Gross pay is any amount before deductions. Good way of thinking about that is, what is your contracted pay? So you see a job advertised at £24,000 a year, that's the gross pay. You take off your deductions, and whatever is left is your take-home pay, and that is known as your net pay. So you might have your basic salary, you've paid some tax and national insurance, you might have paid into a pension, and you might have also paid subscriptions into a trade union. Once all those deductions have come off, your gross pay, also known as your basic pay, then you're going to end up with your net pay. And that's what you're going to be taking home. And some other information that you might see on a pay slip is the pay-as-you-earn reference number. Every employer has a unique pay-as-you-earn reference number. It's in the format of 3 digits, and then 4 digits, normally a letter followed by 3 numbers. The first 3 digits, so example on screen for total photo is 123. That is the HMRC office number. So it's pinpointing as to which HMRC office is responsible for this organisation. And then within that office, it's given a unique reference number to pinpoint that business. So this is something that you would expect to see on your pay slip. It's definitely something that you're going to see on your in-year and end-of-year reports. So for example, on a P45 and a P60, those numbers might not mean a lot to you at the moment, but we will be learning about them and looking into them in later lessons. But the key thing is, at the moment, what I want you to understand is that we will be able to distinguish who your employer was or is through this unique reference number. And just some more terminology which can cause confusion when looking at pay slips and looking at payroll in general. And we've got to think of payroll from 2 points of view. We've got to think about it from the employer's point of view, and we've also got to think about it from the employee's point of view. So we, as an employee, are going to be paying taxes, national insurance, and some other deductions or costs. As an individual, as a worker, as an employee, that's what we are going to be incurring. But the employer is also going to incur some costs also. They've got the cost of paying you, which is your gross pay, but they are also going to have to make some national insurance contributions. They may have to make some pension contributions also if you have opted into a payroll scheme. So within the pay slip, you might have a running total, if you like. You might have a summarized view of this month, and you might also have a year to date. So if we just look at the left-hand section for this month, you've got your taxable gross pay. So that's a £2,500, which we saw at the beginning. But the employer also has to pay national insurance. It's at a different rate to the employee, and it is a cost to that organisation. And just looking on the right-hand side, and I've tried to split these through colour, using red for employer and green for employee. We can see the year-to-date, the running total for national insurance and pensions for both the employee and the employer. So as the months roll on, or the weeks roll on, or whatever payment frequency you're working on, these values will increase. And again, the format of the payslip can be whatever way the organisation wants it to be. As long as the key elements are there, it can be displayed and it can be formatted in whatever way the organisation feels fit to display that information. But saying that, nowadays, it's the software, the computerized payroll software, that normally dictates how your payroll and payslip reporting looks. So just a few examples here of different ones that I've come across in the past couple of years. Some of the key information is still there. You've got your tax code, you'll have your NI number, your NI code, the NI table letter, the period. Now on this one, it's actually showing you the pay period instead of the period ending date. If you remember back to the beginning of this lesson, the period end date was the 25th of February 2023. This one, it's looking at period 12 of 2021. So that's going to be March 2021, which this payslip relates to, because the period starts on the 6th of April with month 1, the 6th of May for month 2, and the 6th of June for month 3, and so on. It might have some extra information such as an employee number and a pay group, and that would be really in larger organisations with lots of employees and workers to distinguish who the individual is and in what department, section or area they are working in. Might also include an employee address and also an employer address. Just a different pay slip here, just to show you the different tax period. So as you can see, this one, tax year 2022, that's when it's ending, and it's period 1. We can see from the pay date that it's the 15th of April 2021, so that does line up with it being month 1 because it's after the 6th of April. So between the 6th of April and the 5th of May 2021, that is all going to be period 1. And sometimes they might just state what the tax period is. And then we would know from the period end date and the pay date as to what year it relates to. So this would be 2019 period 5. And it's 2019 because it's run from year 2018 to 2019. So take a look at some of your pay slips, past and present. See if there's some key information which we've looked at today, which is actually aligning, such as your national insurance number, your tax code, although your tax code will change as the years go by. Also your national insurance letterman, and have a look at, see if any of them are displaying any periods, payment dates, or period end dates.